Greetings, market rebels. Welcome to this week's macro measure. It is Sunday, December 17th, 2023. It's a little bit in front of 2 p.m. here on the East Coast. I'm getting smashed by tropical storm type conditions. Rain up to 6 inches. We're already, I think, probably at 4.5. So uh, I've had some power issues. So let's hope we get all this taken care of. That's why I'm going to start rolling with it because it's starting to get pretty drenched out there. Um, Flood warnings and stuff like that. Anyway, I'm Wayne. You all know that. So let's move on with things. Just going to do the best I can under the circumstances. And I got to get this done for you all so it gets out at a reasonable time. Trustee disclaimer, trustee intellectual property rights notice. And then unfortunately, I'm back to 2 slides for this week's stream. This will be slide 1 for that. And then I'll leave that up just for a few moments. And then hopefully I got to all this stuff. I tried to do a quick changeover on everything I needed to. Just getting really pressed for time for various reasons. And here's slide number 2, which we'll come back to. So needless to say, there's a lot going on. And so we have a lot to cover. So we better get started by starting with a new share. Let me see if I can switch to a screen like I'll do screen 3. Then let's see if I can take what's down on screen 3 and then just move it out of our way. And hopefully that will reveal and I'll double check we're seeing the right screen. We are. Yeah, and that starts us out actually where I want to start out at because we started talking about the Mag 7 in various ways as it's become popular, and over the last really several months, even more. But we pointed out that there was this breakout right from the consolidation. They pulled them back right to our resistance line, and then they really launched them since. But notice that these big dogs, market leaders, they have not broken out to a new high, whereas I think the diamonds did. So just to give you an idea, new all-time high. So this to me is very interesting because this is telling me that one of the key things that could happen here is that a lot of stocks start to cool off a little bit. I'm not saying a lot. I'm kind of thinking most likely scenario is we get a mild pullback. And then, I would not expect them to flub up the normal run and gun into big American holidays, which of course you have a really big one coming up in the form of Christmas. And then you have another holiday there the following week, essentially for the new year that would follow. And so these are the end of year typical goosings, really, anyway. So it all sets up that way. I just wonder, can they really push this relentlessly after what they've already done and after where they brought things? And to give you an idea on that, and we'll talk about this if I ever get to sector situation, we'll talk about it. But here's some of our sectors. We talked about recently how things have looked just really dreamy. If you're a bull, it's looked dreamy because all the things I think you'd want to see technically started to happen. Things we were pointing out that were somewhat problematic, that were a little concerning, or even more than a little concerning at times. That's all been erased just really, in the last 6 weeks, roughly speaking. And so if you look at something like the XLY, which again, discretionary spending, the only reason I'm not in love with it right now is because it's got an 80 RSI reading on the daily. So it's gotten a little, I think a lot of this stuff's gotten ahead of itself. But these key things like transports, XLY, the financials, they've all really started to fix themselves. So this really broadened out. And so that's what part of the reason I've been saying that, right? And look at the industrials over here, XLI. So the problem though is look at the collective RSI readings on some of these sectors that have really done their thing. And so that to me is the problem in the short run. Now, maybe it won't matter, right? You've got 2 weeks left. Maybe they will be able to run and gun. I would be surprised if there isn't more than maybe the 1.5% pullback we've seen. I would think that something on the order of 2 to 3% quickly would be, I don't know what would cause that. I don't know of anything yet over the weekend that would cause that. Who knows? But regardless, maybe there's some profit taking from the short-term players. Don't know. But I think a pullback makes sense, a mild one, and then I would expect them to really, because we've been calling for this now for a while as our most likely scenario in the webinars and things like that. That right when less the news changed, we had a news dynamic shift. There would probably be this scenario that's been playing out so far. It really went along with the calendar. We've been flashing nearly all year. It leads into another really typically very good year for the market, which second best year of the 4-year presidential election cycle. That's been covered by us, way too much, but you never know who's watching, right? If people are new, just a reminder. So it's this, I mean, it's just, I don't know why you would complain. I don't know even if you really are very technically based, I don't know what you're looking at. You really can't fault this rally in too many ways other than maybe it's gotten ahead of itself. You might even have good reason to say, well, it's just a lot of short covering. And a lot of that I think is true. I mean, we've even made the point ourselves that really, right, I could probably bring this down, but we don't need to get into that yet. But the bottom line was that they did have these hedge funds doing their thing, and I think what we mentioned this. I think we mentioned this. This is this line from the top here on the second slide for this week, but it was this one right here, these two. So I think we were wondering, like this, I think even spelled that out that look, it just seems strange that you would provide fodder, right, short fodder for these guys in the Mag 7 and other names. They went heavily short, the hedgies, that is, right, because the timing just looked really bad in terms of what normally happens, all cycles, time of year. The charts look really good, as we've been saying. I mean, you really can't say too much about it. And I think that factor combined with the Punch Bowl Pals 180 is really, like, that's pretty much done them in. Now, you might say, well, that means sell on news. It's all priced in. It could be, right? We just never know. But in terms of the short run, I could buy that a lot of the initial burst from the reshorting at an inopportune time in a big way by the hedge funds and Powell, like that news is now factored in. It is a very curious thing, but that's where I would bring this tab over for us to check out. And I might just flip all through our tabs right now just to take care of it for us. But this to me, like, struck me, the way Powell came off struck me as odd. And I was waiting to see if Zero Hedge or somewhere there would be someone that put something together about it. And this is what came out. So you might want to check out the article from Friday that says, now it all makes sense. Because really, as they make the case here, there was a lot of kind of hot data. So the whole, like, we're data dependent and, we're not talking about rate cuts, and suddenly Powell really 180s. And well, they tried to walk, someone, I forget who it was, tried to walk that back from the Fed the day after or on Friday. Regardless, Powell on Wednesday really did signal the tune, right? Sang that tune that we've been saying that the bulls really wanted to hear. And he sang it so well that if you jump to, I think, would it be, where are we here? Here, CME watch tool. Right now, March is showing that, remember, where the current target rate is here, where my cursor is, excuse me, and they've got that's really looking like it's not likely to hold, once you get through January. So January is still looking like it's going to hold according to the markets. But after that, they've now repriced things. And look at this, just 1 month ago, there was only a 28% chance. And now there's a 62% chance that we're down small, and starting with that March meeting. Now, you could say, well, that's still a ways off, and it is. I mean, you got 2.5, well, at this point, almost 3 months, right? So, okay, we'll see. But that is a big shift, the way the market took what he had to say. And you can go from there, right? It just starts to price out lower and lower and lower going forward. So what happened there? There's some speculation. So if you want to read about the speculation, go to that story, but it did strike me as odd. I'm not shocked by it only because I've seen the Fed, like, I'm just don't even know how people still assign credibility to them, frankly, but that's to each and his or her own on that. Another thing I would share from our tabs is the following. Let me go back up, and that is really the next one of the next ones. No, this one here. And so I'm kind of jumping ahead for submitted for your consideration into that section on page 2 or slide 2. But I think, right, I've been mentioning this a little bit that, due to inflation, really, should stocks actually be higher, right? It's something we have to consider, even if you're like me and you don't really believe the economic story. You have to allow for the fact that if they're going to really, if we are on the verge of a bull market, a real bull market, and it could even just be a hype bull market that gets started that way, and then we see delivery on it later, right? The market supposedly is forward looking. So that's the question I've been wondering myself, right? Where should stocks be? And interestingly, someone put that together, and that's the next one right here. And that was this Michael Guyad guy, who's I guess very entertaining or whatever on Twitter. And I've seen, I like to read what he's got, some of his thoughts and stuff like that. So I apologize for the adult language in this, but right, he's making the point that you're really only seeing nominal highs because of what's happened here in terms of inflation. But if you were to get back up to where you were at the highest high in the market in 22, you probably have about 10% left to kind of reach that with inflation, inflation factored in. In other words, to say, like, to really you've got to really get up there if you adjust for inflation. So there's still a ways to go. So if you think the market in some ways could be underpriced by 10%. So let's take care of these tabs while we're here, because that's just part of the style of this. It just may as well bounce around and take care of it. Just want to point out, right, that I still think, like, what's really happened here is that and this is probably the best view for it, is right. We've been saying, right, just keep your eyes on the yield, keep your eye on TNX and dollar, for on Thinkorswim dollar DXY, and these things have been getting smoked. And the market's been rallying, so that inverse is strong. We know what's going on with probabilities already. Interestingly, right, I'm kind of starting out on this page for the AAII sentiment survey, and you can see that the bullishness compared to bearishness, this is the widest real spread that we've had in a long time, right? We haven't been up into the 51 versus something lower than 20, even here in July, right before things rolled over in the market. So this is now extreme relative to recent history. We could back up here and we could see what this view here, right? So the 1-year bullish high is, right, that's the highest high, very close to the highest high that we've seen. So just keep that in mind, and you can see how low this bearish data is. I mean, right now, the bearish sentiment. So that's a little bit of a concerning thing. This imperfect CNN fear greed, right? This thing is still kind of dawdling around in that greed zone. It hasn't made the move to extreme greed yet. Some of the factors within it are in extreme greed reading. But here you are kind of with a little bit longer term perspective on that. So just to flash that, again, not a perfect thing, but gives you an idea. So you could get somewhere. We do often do the check, so we may as well. So here's the check on the MMTH, which is the percent of stocks above their 200-day. Notice that there's still room there. I'll just work our way down. 100 will do next. That's a little bit more up there, I would say. But again, that one still has room. It's really, again, I think the 50 and the 20 that stick out to be like really very close to some of the extremes that we've seen over the years, right? Because these are, so many stocks were getting battered. They haven't really marched above their 200 and 100 yet. But of course, the 20 being more responsive dropped down, 20 and 50 being more responsive, it dropped down more quickly. And so they're able to get back above those more easily. But you got pretty darn extreme. Now, there have been others that have been even more extreme. So we can't say that this thing's it's a lock, it's over. You could still get there on more, but we'll see what happens with that. I mean, I'm just giving you a general idea. And let's talk about the cycles. And remember, so we've got this cycle, and I've got them out of line, my bad. So we've got this cycle here that is kind of the best I could find, just again on short notice. And you'll see that the pre-election year, right? We said it last week, right? We keep looking at these sort of seasonal cyclical analogs, not because we are fully buying into them, but it's because you have to be prepared. Well, what does typically happen? And frankly, these have worked very well. I mean, they've really worked well, I think, for this year. It's hard to deny that. And the end of this year is pretty much right. Whatever Dow, spiders, NASDAQ, whatever you're looking at, the second half tends to be rip roaring, and the overall month of December is excellent, and the whole second half is really the more rip roaring part of it. So it really wouldn't be a shocker, I think, for them to completely gas pedal this thing into the end of the year. They really could. It sort of goes against my technical instincts, though. Like, I feel as though that's really more of a really overdoing it, given how overbought we are right now. It's just that you can't rule it out, which is why this game is so hard. I think it would make a lot of sense for, again, more than one, probably really 2 to 3% pullback from the highs we've seen in a lot of things. And I'll show the Mag 7 again and why that might not happen, and why it might not need to because of the Mag 7. It might all balance out, even if they do take up profits and let a lot of other things cool off. But here's your pre-election year. We're in the black year, right? All of this is up through 21 pre-election for the presidential election cycle. But you can see that we tend to do very well there. We were charting this, tracking this really all through the year. And look, really, if you look at next year, it tends to still be a good year, right? The next year tends to be a good year. So that's what you're up against. So here we are finishing the year strongly, and you're really set to keep going. And I just would point out that we've been tracking this every week in terms of making sure everyone remembers this, because the data collected by this fella, Nick, I guess, who at the time was with Ritholtz Wealth Management, he took a look at the Fed rate cuts from 94 to 2020, and he found out that a year after the rate cut started, that you drop by about 10%. So that's what we've been saying, that until the Fed actually starts cutting, right, that's when you would really expect to see things start to fall apart. Now, on this one, this is really more of a graphic view, and if you haven't seen it before, maybe you'll like to just pause it or check this out. But after the Fed starts cutting, you can see that after you go a year into it, 250 trading days into it, I believe it's trading days, that you get these pretty poor performance, right? So it's kind of the acknowledgement, the Fed acknowledging that things are slowing enough that they've got to cut, is really not good. It might be different this time, who knows? But just want to point out, right, these are the stocks that these hedgies started to reshort. Again, to me, with the market looking excellent technically, and at the very worst time of the year, and versus some of the worst seasonal cyclical times as well. So don't even know what to say about that, but they did. I get the valuation argument. I just think maybe, I don't know, if I were involved, I would really want to work with a timing factor, not just, hey, this thing's overvalued. But maybe they do, I don't know. But it just seems like a lot of them get themselves in trouble by getting overzealous on valuations before the market itself is ready to start discounting those and factoring those in. But everyone's going to do what they see fit. So how do I know? But anyway, that's your tabs check we had to jump ahead to. And getting back to this, I will just end on the comment of, look, these leadership sectors like XLK, leadership sectors recently like XLY, the discretionary, the transport, the XLI. These things are just ridiculous, right? Some of these are ridiculous at this point. XLF. And so I think they need to just chill for a couple of days. But once they do that, or should they do that, for all I know, they just keep going, right? But what I would say is, look, this Mag 7, this is really the silver bullet or the backup plan, if you ask me at this point, because this thing took out resistance in the form of that line that I just highlighted in blue. And so it's above there as of right now. Now, I think just on a quick sweep of the indicators, things are looking pretty good here. And you can see the volume was very strong there, right? That was a very strong volume burst. It's the most volume we've seen in nearly 2 months in terms of the session. And you made a new closing high relative to other ones, and you made a new high, and you're very close to the highest high that you've had. And I think that's of all time. So you're not very far from breaking out to new all-time highs on a just logical basis, knowing how these guys work. I find it very odd that they would not be this close to printing new all-time highs in the biggest names, which carry the biggest weight to keep the indices buoyed, and that most of them, if not all of these big players own, right? They're basically want to give themselves a great mark. Well, just being able to do that in these names, if you sell, even take profits on a lot of other things, it would make sense to me. And here's the thing, here's the kicker, here's the silver bullet. This is only at a 61 on my RSI right now. So to me, right, that tells me it has room to run. It's actually not an overbought situation as a package, this little mini basket. So I think without the news shifting, I think the bulls really, it's all there for them really to finish this year out strongly. And again, like I guess we've been saying that unless there's a news shift, expect that. That's probably what they'll do. And we can't be surprised when they do what we think they're probably trying to do or most likely to do, aside for a news development. And you just haven't had it. And so we can move on from here. But what I want to highlight is that some of these names in here look really good. Right. So here's Amazon. Well, if you pull back a little bit here, and what it may do is just get a better view on some of these. So let me pull out this one here. Look at the Amazon. You might see a cup and handle type thing, but there's just, right, you're getting to the point right now where this thing to me is got the nice cup and handle, and it's looking like the momentum's been sort of sneakily building, right? It's sort of building underneath the surface. This thing looks prime for a breakout to me. We saw some UOA on it again, and we've had a alongside call side idea in here as well that runs through the end of the year. I went with end of year thinking they might try to mark things up, as often they do. You might get max performance out of that expiration. But this is right on the cusp of doing that, breaking out. So that's obviously a big name. I think Tesla, right, is another one that you could see that sort of resistance line that I've got there. You can see that sort of early efforts to try to go. I feel like the momentum's on the verge of coming back into there. If it does, right, this will obviously give a nice boost to things. And then Apple, right, I don't think it gets much bigger than Apple. And, Apple's very close, I believe, to the all-time high. And you can see that it was just off the all-time high, which I think was on Thursday. And again, I can't say that they won't pull a few things back early in the week, but as long as these SMA support holds, I would expect them by the end of the year to try to get this close to the highest high again, if not push through. But this thing to me has more room to go if they can break it out. So it's not, I would say right now, it's probably not you're not going to find I mean, you can find lower RSIs and other things, but it's not really even at 70. And considering where some stocks and sectors are, this isn't by comparison all that bad. And it's really lurking there to me, like it's been dormant and they started waking it up, and now it seems like they're on the cusp. So we'll see if they can do it. But I just wanted to point out that some of those bigger names in there are ready to go, and I just think you could see the price action on this view with trading view better than you can on Thinkorswim. So that's that. Let's get back over. Let me move some things over, make sure we're covering everything, because I tend to get excited about certain things and not get back to them. So the summary of last week's comments were, we said that the SPY could eclipse the recent highs, that it would then start, the next realistic target was the all-time high. And that turned out to be the case. So let's see. I think there was still one that was a little bit higher, if I'm not mistaken, right on this. Yep, it was 479. So this is, again, you kind of have the cup and handle we've been talking about in some people's eyes. This thing's broken out, like we said a while ago, right? And we were not poo-pooing this, because they really brought along a lot of stuff along with them this time. They really started coming, not just, it may have initially been led by the Mag 7, but they really started coming after things. And I think I made that clear, that the sentiment, right, really started. Look at the McClellan Summation Index in terms of the breadth, and look at the McClellan Oscillator. So you could see they had higher lows put in, and they just started coming for it, and it really ran. So they might have already started to take profits on the shorter term and started working some of these things down just a little bit. But overall, right, when you see all the sectors that we showed earlier that they brought along, and you see how good the breadth has been, and that on the McClellan Summation, you can look at other things too. But overall, right, this has been really healthy. I mean, there's been times where you could definitely nitpick this market and say, but yeah, it's not doing this, it's not doing that. And if you really want to get super picky, you could say, well, which I've been bringing up myself, right? Energy has not really responded. But again, we always have to remember, I think in spaces, especially like energy, it's got its own unique story too, right? It's not just another sector. I mean, every sector kind of has its own story and characteristics, and energy certainly is so dynamic. So you would think that energy would be, again, I think a lot of people have kind of thought that energy really should be doing better. And we've been trying to make the case that maybe things aren't worsening. Maybe we're starting to see early signs of an attempt to finally reverse this. But really, if energy joins the party and everything else stays fairly buoyant, I'm not sure what you can say about this market other than, if you don't agree with it, I get that. If you think they're getting way ahead of themselves and these rate cuts are talk is premature, the economy is not going to have a soft landing. Things are still deteriorating globally. Things are still not very great internationally. I'm on board with a lot of that, but again, we are from the trade what you see school, right? We learn to become from that school just through getting smoked when we focused on the macro stuff, right? And thinking, well, this is what should happen, or here's what I believe will happen. Here's what's most likely based on the economics. And that, once you go through the pain of missing out, or you fight against something that you shouldn't be, you realize, right, that if you want to be successful, you've really got to put that stuff aside. It's good to keep that in mind so that you're not surprised by certain developments in the future, whereas other people that have blinders on may be, and they're not respectful of risk and they don't manage their risk accordingly. But so I do still think that's worth its time to keep up with. And that's what we try to do in Market Outlook and other things we share with everyone. But that's really more for the background noise, like to catch like the background vibe. So you are not blindsided, you're not caught off guard, and you're not quadrupling down, pyramiding up, I should say, quadrupling, pyramiding up, or whatever. When you shouldn't be, when you should be more of a roller, right? You should be more of an over roller is the point. You know what that means. We're on the same wavelength. So anyway, that's a nitpick though. I mean, Um, that we'll see what happens there. I would still say, the way that things are, I don't see how you can rule out an attempt by these guys to try to work up, if at all possible, in the absence of a lack of a news shift, I should say, right? There's no major news dynamics that shift anything, which there could be. You got to be ready for that. I don't see why they wouldn't at least try for this, and that's another couple of percent. I'm not saying immediately. I really do think like a little back off, a little bit more back off makes sense. I would probably say you back off another percent from the high. So I guess that would be, if you go down another percent, that would really be another percent down from here, would actually be from the low. It looks like, I think, would be basically us getting that little 3% pullback we're looking for. So really, you just come down a little bit more and you're there already. So that's it. I mean, I think you get a little 2-3% pullback like you've gotten, and then they try to, all things being equal, news wise, they try to keep going as long as the dollar and the TNX continue to be pressured. And let's face it, right? They have been just blistered lower. These things have been smoked, right? The dollar's been smoked and the TNX has been smoked. And so again, we said that don't be shocked if the VIX starts printing, the VIX prints lower. They've been smoked. We said don't be surprised if the VIX prints lower and lower. And I still think that sets up. I mean, honestly, I think you could see maybe us even get a 10 handle on the VIX at this point if this end of year scenario plays out, because a lot of people do not like to be long over the next couple of weeks in terms of volatility. I used to avoid it like the plague. I would try to sell this well in advance in case I was ever forced to buy in December, because that's the way the order flow was as a market maker or a desk trader. And I would always own out in Feb and March if I could all get my hands on it. And I didn't like being long deck in Jan because the volatility, it's very hard to get. Sometimes you don't even wake up for a week or two into the new year. I don't think that'll be the case this year, but what I'm getting at is you often kind of have this kind of holiday mode or phase that just hangs over the market, and people are happy with where things are. Let's face it, they ought to be at this point, given how how the economy is going relative to what the stock market's doing. So all you need to and all you need to do to really get a continuation, if they think we're really on the verge of a new bull, then they've got 10% discounted from the all-time high if you take inflation into consideration. So they could have this market up significantly in the first quarter, because there's always a lot of hopium that gets built into things. And the next year's typically, again, the second best year of the cycle. So if they want to front run each other, which they do, a lot of them could just keep buying or start buying, in earnest. I would say, yeah, we'll have to look at it when we get there. But right, I'm not flipping into some stark raving mad bull. I'm just saying that let's look at the reality of everything in totality, and it's you got to acknowledge that these are possibilities. I think if you're an objective market viewer, market participant, and again, just stick with the trade what you see, and I think it'll get you a lot further than trade what you think. But maybe you can be a better thinker than I was when I first got started. That's for sure. Thinking too much like college professors. Anyway, covering the comments, that's what could happen with some of those things. There are obviously key things. We said, so many things are battered under the surface. So we concluded the all-time high talk, right? It certainly looks like we could still try to take a run at it without a news shift. And that would sort of get through there, right? Then you start to talk about the new leg, right? Developing, and a new bull developing. And that's what maybe still going to suck people in. We'll talk about that later, but you already had the stealth bear. That's the point I've been trying to make, that under the surface, they were very crafty, and there was some stuff that really got battered, a lot of things that got really battered. And now, right, they were able to kind of gloss over that by Mag 7 levitation, but now it's kind of flipped, and they came in for a lot of that stuff. That stuff's gotten a little crazy, and now the Mag 7 could really serve its role again because of its weightings, and a lot of those stocks we saw look good. And the package itself is on the verge of breaking out, right? That would be, imagine what that would do to the end of year mark out. So the outcome of the week, what we all know what it was, right? From the get-go, the gang came to play. They ran it right from the start on Monday. There was no hesitation. Got to FOMC, punch bowl, pal, green lighted, more green. Basically, that 180 flip again. Read that article. It's kind of hinting at political pressure, which makes sense. That's not uncommon. So now we're back into widespread overboughtness. The trends that we talked about holding in place, they remained intact. And in fact, they zoomed them into expiration in a lot of stocks, not necessarily the indices, but a lot of stocks. So they ran the table. You got to give them credit. There was virtually no give back. You had a very tiny bit really towards the end of the week, maybe some profit taking, people realizing where some of these RSI readings are. But the Santa rallies teed up. I think they would really tee it up nicely if they just allow a little more pullback early in the week, and then goose into the close of the week, right into the holiday, come back and do the same thing, small little down day maybe after the Christmas holiday, and then you come right back and you goose into year end. I mean, that would be, again, without a news shift, that's what I would expect. Where am I now? So in terms of the current assessment, we did the tabs check. I would still stay at DEFCON 3 because I still think a little more pullback makes sense to me. I'm not saying that they will certainly do it. I just think you should do it. It'll help you out ultimately by pulling it back. I think, and it'll keep this rally more healthy. I think that's the way a lot of people look at it, and I think that's really a good way to look at it. So I think if they start to take profits in some of these real screamers, right? And so things, I'm kind of like patting myself on the back without intending to here, because Snap, people are going to be like, oh, Wayne's talking about Snap again, but just the whole Snap thing. The reason I'm bringing this up is look how relentless this thing's been, right? It's just it's been crazy, and so I'm glad I was able to get ideas alongside ideas in at the right time in this one, and just kind of went out of my way to, I don't know, I can't really pound the table. It's not my style. I don't think it's productive. I don't want people thinking, boy, this guy's really excited about this one. But I have to say, I really was excited about this. I really thought this should have happened a long time ago. So, you can't always get the timing right. I was waiting for this to really start doing this, and then it did this. But this is what I mean by a screamer. I mean, this is ridiculous at this point, right? Look at the RSI it's a 94 RSI reading on Thursday. That's what I mean. So you can't be shocked if they start to sell into some of the stuff that's gotten this insane. And then to offset all the selling they do there, you come into the Mag 7 that looks primed to break out, and you really don't harm the market. And that's the basic game plan they've been using over the years, right? They've been a lot more deft with their touch, I think, in recent years, knowing how they can keep a better bid for themselves by working their orders in a more clever sort of concurrent fashion. Let's just put it that way. Let's see. I'm still asking, have they drawn too much performance forward? That's why I still think a little bit more of a pullback would make sense, because they've been so relentless. If they do pull back a little more and then stabilize things maybe on late Tuesday, maybe they stabilize things on Tuesday, and then they start to get things going again. Can they gas pedal it all the way into the Santa rally, which, and then into year end? And I do think they can. I would say that's probably, like I said, that's probably what happens in the absence of a dynamic shift in the news. The rest of this, right, all the stuff we've been talking about has been really calling for more run into end of year in 2024. And again, the next realistic targets still remain the all-time high. So we covered that. The other things I have submitted for your consideration, besides the stealth bear and what the hedgies did, is this new AI age, right? Are they getting premature about the AI payoff? And some people are going to say no, and some people are going to say yes. But What I would say is the AI hype in my mind is enough to advance this bull market if we're about to have one. Now, I don't really think that makes sense to me personally. I'm just saying that the hype alone is enough. So if you're in the skeptical corner of how this AI is going to do all these wonderful things so quickly, the way that these guys are trying to sell all of us on, I'm with you. I would be surprised if everything works out so quickly and wonderfully. But maybe again, it's certainly not my area. I admit to being like completely oblivious to it. I'm just saying that these guys start extrapolating everything so quickly. I don't know if you can get that payoff that quickly. I'm kind of skeptical about that. And so, how does that really help the bottom line? I don't think it does in the very short term, but I do think the hype from it is all that's needed anyway. So just keep that in mind. You can think about that on your own, um, because the hype might get this thing started, and it might help initially, and then the real follow through does come in a year or two, and they bet on the hype early, but then the payoff, even though the payoff was later in reality, it didn't matter. And that could definitely be a scenario in my mind that plays out. And if that does play out that way, right, then you could actually have a situation where people say, well, the stock market isn't the economy, and that's true. And people say the stock market is detached from the economy, and that's true. Ultimately, it has to be related or has been related to it. Ultimately, right, when the rubber meets the road, the stocks can only do certain things if the economy is imploding, right? And then eventually there's a recognition of that. That's been my experience. And so having said that, I'm looking at it and saying, but here's the thing with AI, they could really have a detachment that's legitimate because the profits, of course, the bottom line could grow. Meanwhile, as things worsen for a lot of people that are no longer employed, which is very sad, but that's a real situation. That's something that could really happen. So again, this is just me thinking about it. And so I could be wrong about a lot of this, but I'm just saying that I think it's really a possibility. And that would be another thing where you would be astonished and say, well, how is this happening? I'm driving through dilapidated main streets, all over, hometown USA's all over the place. And you might be, but as far as the big kleptocracy, the corporate situation, the kleptocracy, it might be real boom times in terms of their stock prices at the expense of a lot of other things. It wouldn't be crazy, right? I don't think it's a crazy notion. And remember, the other final thing on that is that you could really get the inflation going, to help the inflation kind of catch up, where they reprice this market to the all-time high, which and through the all-time high, and it keeps going. It goes up another 10% from here, and it still really hasn't taken out, if you inflation adjust the former high, right? You'd get right back to the former high, up about 10%, according to Michael Guyot, right? So it's not my calculation, but I'm willing to say I think he's probably pretty close to be my gut instinct. So I'm going to leave the rest of it there and not really talk about everything since it's kind of like reprint on slide 2. Let's just look at some of these markets here in the big four that we haven't covered and some other things. And, I think you'll see, right, that there's 74 there. And so the Qs definitely ran the table all the way through. I think the SMH helped that. We were talking about how good this stuff looked, and we went with a lot of SMA. I mean, a lot of names were in the services that were tied to semis, and I think I feel very fortunate that we got the performance that we did. I just feel like 77 on the RSI, the stretch that we've got now. Again, another thing which should get it a little bit to me, a little bit of back off in a lot of these things. Nothing massive, but I still think they would back off small, and then I think the most likely path is that they just keep going, again, in the absence of a big shift in the news. So I think you have to be on guard in the Qs, SMH, XLK, individual issues. Of course, I think Avgo might be another kind of crazy one that comes to mind. Let's see if I'm right about that. Um, and Avgo bursted to all the way through. We were talking about this one looking good. It's at 80. So it's been, it really it's really up there. Again, I would again expect some kind of a little pullback in a lot of these things. And I think they can sort of balance things out to a large degree in the Mag 7. But the Dow, right, the diamonds, they did their thing and they are, I believe, are through. I mean, you're actually through. Again, another one I would say needs a little bit of a pullback. And that's I'm not expecting that much more than a little pullback again. I know I'm repeating myself, but I don't see why these things we've been saying that why would they pull back, right? This is their time to shine. I mean, look at this IWM performance. This has gotten absolutely haywire. This thing's gone haywire. So another one where I would say this thing should really pull back before it keeps going. They probably just need to take some of this froth out of it, and if they do that, they're doing themselves a favor. So using the opposite of the base camp example and illustration I use, there is no base camp here, right? The base camp was all the way down here, which is, in my mind, is visually too far away from here. We did say that this thing was coiled. I get all that, but I'm saying that as of right now, it's not like they came up to the high, pulled back very small for a while. They still hadn't gotten there. So I think this thing needs to kind of pull back, maybe close this gap, base camp it for a little bit, and then try to go again. And that's what would maybe let it break out, is that instead of taking this really kind of incessant run all the way and trying to get through all the way, this time around it has this incessant run, backs off, they hold it, and then they're really close to the former highs that they need to break out from. And there's enough fuel, into my mind, left over to pull it off. And they're really close to being able to do that. If they play their cards right, which I don't know if they will, they might be able to do it in my face without a pullback. Maybe. I just think my all of my kind of technical overbought instincts are telling me no, there needs to be a little bit of a pullback. You've got to be on guard for a little bit of a pullback. There were some reversals in the dollar and TNX, so maybe those got a little too battered. Maybe the market's gotten a little too ahead of itself. But again, I don't see any trend changes there without news. Like, it would really be massive geopolitical news or something along those lines that would shift this on a dime. In my mind, the way that things are set up, they're set up to keep going higher. I don't even know what to say in terms of what there really isn't. I mean, like we said last week, the week before, really too. What can you really complain about? They look at the participation they're getting. Real estate, healthcare, right? The communications are right near the highs. Thanks to rates going down, the utilities have gotten back off their butts, and they've ran, right? Basic materials have ran. Everything is gone. Virtually everything has gone. Semiconductors go without saying, right? Even the metal stocks, like, it's just been a massive across the board rally in virtually everything. So it's very hard for me to find fault with it technically, given what's been developing. And I think we've been saying that for a while. It's just the last couple of weeks, you really can't nitpick this thing that much. It looks pretty legitimate. And so that's got me, thinking different ways. That's why I'm sharing some of that kind of submitted for consideration thoughts, because the whole thing I've got to get away from myself is the whole, this could really be bad stuff in the real economy, and it could. But again, I think the hype is enough. We saw what happened in the 90s. I'm not going to forget about that ever. And right, just because that was so extraordinary. And of course, the crash of tech afterwards was equally extraordinary. But the hype, you can make a lot of money in the hype phase, and that's what we're all here to do, right? We're all here to take advantage of price changes, and the bigger these price changes are in our favor, the better off we all are, right? And the better off our 401ks are and everything else. So that's where we're all at. A lot of us, I should say, and that's what most of us want. So even despite my concerns, right, I'm still hoping that that's the case. I'm hoping that's the case, and I hope to be dead wrong. And so that's why I'm bringing those other things in, because it might just be that the hype gets out in front, and somehow it doesn't make sense. It's ludicrous for a while, but then the reality finally starts catching up with it. And then you do see some of these productivity gains, and then things really do translate to the bottom line. And so there's a lot of excitement out there. It seems a little ahead of itself. I'm not turning into a true believer yet or anything like that. I just think we need to think about the things I've shared this week, and don't let yourself, miss out on what could be even just a very interesting and potentially very profitable hype phase. Even if that's what it turns out to be. It could just be 6 more months of hype. I don't know. It could be 3 months, and maybe it ends here. Maybe it's 3 years of hype. I don't really know, of course, but I'm just saying that if that's hype's going to keep things rolling, and we want to profit from things rolling, then we need to roll along with it and roll while we're in it, right? So just food for thought. Just thought I'd kind of spend some time on that, because the charts are just right. The charts are what they are. I think they look great, other than the fact that they're overbought. And in summary, I would say if we don't get that big news shift, or news shifts, plural, where multiple things start to really pile up on the market suddenly out of maybe nowhere, that could happen. That would be the only thing that I think derails a good end of year finish, and even a good start to the new year. I think if the bulls handle things smartly, they can cool a lot of things off, keep the market mildly positive, and be ready to keep running. Because that's just how good things really look that way technically. So people, whether it's true or not, people seem to be committing capital and investing that way. And the usual suspects are shorting it, hating it too much, and that only helps it. And of course, right, the sentiment though is the other little outlier where that's maybe a little ahead of itself too. So that's contrarian, and we got to keep our eyes on that. Again, another reason probably for a brief pullback here. And I would just be at this point, with where the RSIs are, I would be really a quick roller. If you're still playing on the long side, I would be an aggressive roller. I wouldn't play games when things are this frothy. It's been my experience that they don't stay this frothy across the board for very long. And it usually catches people by surprise, and happens fast. So you could be down 2 or 3% and be like, man, what happened to all those gains that I just got? I'm now only up half of what I was, and it can happen very quickly. So again, if you had some really good gains, I would my catchphrase is bank and roll. Just bank and roll, because you'll be able to put a lot in the bank and stay with it. And if your roll's not working, right, you over roll maybe 40 delta, 35 delta, and it's not the end of the world when RSI readings and sectors are trickling in at 80 something. That's just not, they don't stay that way on the daily for all that long. So I would say, like, just be smart and nimble as always. And I want to thank everyone for tuning in. I know it was a little rambly, but I kind of had some time pressure, and I really wanted to share some of those thoughts. I hope that they help you. I hope they maybe help you this week or some week in the future. And I want to thank everyone for tuning in as always. And I'll get right on sector situation, which will be brief this week. So thanks again for tuning in. Have a great finish to your weekend, a great week ahead. If you're going on a holiday trip or end of year trip, have a great safe trip and all that type of stuff as well. And we'll be, I think, having some kind of forward-looking discussion this week or next week for the upcoming year I think it's going to be on this Tuesday or following Tuesday. We'll see. I'm never really up on the calendar as much as I should be. So everyone take care, and thanks again.